Are we standing on the edge of a housing upheaval in 2024?
We've gathered exclusive insights from industry experts like Jason Walter to guide you through these tricky waters.
And the best part? You'll digest all key points in mere minutes.
Exactly. Discover how Jerome Powell's latest interest rate decisions could impact your buying strategy.
Welcome to Financial Insights in Minutes, where we simplify the top real estate market videos for you.
Stay tuned as we explore key trends shaping markets from Austin to Houston.
But first, let's hear from Jason Walter on Zillow's housing forecast. Don't miss it. Time to navigate the currents of today's discussion. The latest buzz is about Wall Street's bold moves in the housing market, particularly Blackstone taking staggering losses.
Absolutely. This is a critical moment for homebuyers and sellers alike, as corporate investors like Blackstone are shifting gears. Hold on tight. It's going to be a bumpy ride.
So what's the golden nugget here? What's causing ripples in the housing pond?
The core issue is Blackstone's alarming $80,000 price cut on a home, signaling distress in the housing market, not just for investors, but for the local neighborhoods affected by these drastic shifts.
Let's break down those key points. What's the damage with Blackstone selling?
Blackstone bought a home for $490,000 and is now trying to sell it for $415,000. That's a big-time $75,000 loss, which is a huge indicator of what's looming for the market.
And how does this impact the neighbors?
The ripple effect is significant. If Blackstone sells at reduced prices, other homes in the neighborhood, even those that were previously desirable, will likely have to lower their prices. This could lead to a drastic drop in local property values.
All right, what are we forecasting here?
If this trend continues, we might see a significant market decline. Once the local sellers realize the harsh realities, we could witness a panic selling situation that rapidly drives down prices across the board.
Wrapping it up, what essential takeaways do we have?
As Blackstone liquidates its properties, the implications are clear. Local homeowners need to rethink their strategies. It's a tough reality for many who bought at peak prices.
But hold on, there's more on the horizon. Our next insightful summary dives into breaking Paramount mass layoffs, media layoffs nationwide.
You won't want to miss the expert insights coming from media expert on the channel Real Estate Mindset.
Let's dive right in. Today's pressing topic, the major layoffs hitting Paramount, shedding 2,000 jobs nationwide, primarily at their iconic Hollywood studio.
Absolutely, we're unpacking the ripple effects this is sparking in local communities beyond just the headlines. What led to these drastic cuts? And how is the entire media landscape shifting?
What's the crux of the situation with Paramount?
The core thesis is that these layoffs are not isolated events. They point towards deep-rooted issues in the media sector, including shifts in audience trust and the financial viability of traditional media outlets.
Let's break down these key layoffs. How many are we really talking about?
Paramount is slashing a staggering 2,000 jobs, with a swift execution expected, as 90% of these cuts wrap up today. That's a massive shift that's shaking the foundations of Hollywood.
What about the local economy? What impacts are we seeing?
This closure's fallout extends to dwindling property tax revenues, which could affect schools and public services. Local businesses that thrived on foot traffic from Paramount's employees are also bracing for tough times.
What's happening more broadly in the media world?
The layoffs aren't just limited to Paramount. Many media companies across the board are experiencing similar cuts, driven by increasing competition from streaming services and a loss of public trust.
Let's gaze into the crystal ball. What's next for the media industry?
It's likely that we will see even more layoffs across major media outlets. This could represent a fundamental restructuring in how media businesses operate, but will it really solve the underlying issues?
And what about public sentiment?
Public mistrust in mainstream media continues to grow. People are gravitating towards digital solutions for their news, changing the landscape entirely.
As we wrap up, what can we glean from this situation?
It's clear the fallout from these layoffs is poignant. Communities must adapt to these changes, and media industries need to confront the growing trust issues head-on.
But wait, there's more. Coming up next, insights from Drew Fellows on the housing crisis.
You won't want to miss the critical discussions around housing trends in the coming segments.
Time to navigate through the turbulent waters of the housing crisis. In this segment, we're diving into insights with Drew Fellows, a seasoned real estate agent from Clearwater, Florida.
Absolutely, this discussion is packed with insights into how the housing market has changed dramatically and what buyers should be aware of.
Drew, what's the big picture we should grasp from the current housing market?
The core thesis revolves around the idea that with rising interest rates and decreasing affordability, many potential buyers are finding themselves priced out of the market, signaling a pending crisis.
Let's discuss how these interest rate changes are impacting buyers.
Rising interest rates have dramatically altered the landscape. Many buyers now find themselves unable to afford what they previously could.
What can we expect for the condo market facing these challenges?
The condo market has been hit hard. Owners are facing huge increases in fees, leading many to sell at a loss.
What are your predictions for the housing market moving forward?
We could be looking at a significant housing market correction in the next couple of years if current trends persist.
And what about the economic factors at play?
Increased unemployment could lead to more foreclosures, putting a strain on the market and increasing inventory.
In summary, what are the crucial takeaways for our viewers?
The key takeaway is to proceed with caution in this volatile housing market, as economic indicators suggest significant shifts ahead.
But wait, there's more. Stay tuned for our next discussion on how to choose the right realtor in this challenging market.
You won't want to miss these essential tips for first-time buyers.
Let's dive right into the housing trap we find ourselves in. A good investment yet becoming less affordable? What gives?
Exactly. The core of the dilemma is balancing affordability with investment potential. How do we manage this unsustainable conundrum in the housing market?
So what's the thesis behind this chaotic housing scenario?
The thesis suggests that if homes remain affordable, they lose value as investments, creating a vicious cycle that puts pressure on homeowners and buyers alike.
First up, what's the deal with investment versus affordability?
Well, homeownership is typically a person's greatest asset, yet the expectation that homes should be affordable complicates things. It's hard to have both.
Now let's look at global housing trends.
Canada is hitting crazy home prices too, an average of nearly $800,000. We're not alone in this housing crunch.
What about inflationary pressures on housing?
Builders are facing higher costs. Everything from labor to materials adds to the squeeze, complicating the affordability issue further.
And how does government policy affect this market?
Policies like extended loan terms and increased lending loosen the grip on home prices, yet ultimately contribute to the affordability crisis.
Looking forward, what predictions does our guest make?
The rise of lower interest rates could trigger another housing boom, inflating prices even higher unless supply shortages are resolved.
What are the implications for the middle class?
The squeeze on the middle class could intensify as inflation rises. More financial stress is on the horizon unless income levels adjust quickly.
In conclusion, what key takeaways should our viewers hold on to?
Viewers should recognize that the housing market struggles need robust policy solutions. The relationship between prices and affordability requires careful navigation.
What did the analysis reveal about government roles?
It confirmed that effective government intervention is essential to stabilize prices while ensuring homeownership remains achievable for many.
But wait, there's more. Up next, we've got insights from Jason Walter on Zillow's new housing market forecast.
Trust me, you won't want to miss his take on the latest trends.
Time to navigate the currents of today's housing market forecast from Zillow.
Absolutely. Today's juicy morsel dives into Zillow's expectations for home values and sales through 2025.
What's the heart of Zillow's forecast?
The core thesis reveals that home values are expected to grow only modestly, by just 2.1% this year, and existing home sales will remain low at around 4.1 million.
Let's dive into the details. How about that expected growth in home values?
Right. According to Zillow, we're looking at a mere 2.1% increase this year and only 1.4% by 2025, a real snooze fest compared to historical rates.
What's up with home sales projections?
They're still at historical lows with an expected 4.1 million sales this year, just a slight bump from last year's disaster numbers.
And how does local market variation play into this?
Real estate is hyperlocal. Areas with excess inventory might struggle with prices, while others with low inventory will see different dynamics.
What does Zillow predict for future price growth?
They maintain a cautious outlook with modest growth expected to continue, driven by inventory levels more than anything else.
And what about changes on the horizon?
If interest rates shift, we could see more buyers entering the market, which would be a welcome change from these sluggish forecasts.
So what's the bottom line from this Zillow forecast?
In short, expect muted growth in the near future. Buyers have the upper hand in many markets due to high inventory levels and stagnant prices.
If these insights were valuable, give us a thumbs up and don't forget to subscribe for more.
Your support helps us keep delivering essential market updates. Let's stay informed together.
Today, we've dissected the predictions from various experts regarding the Texas housing market.
Yes, Jason Walter highlighted the diverse trends and the impact of interest rates, while Ken McElroy foresaw stabilizing prices amidst corrections.
Drew Fellows pointed out that amidst this volatility, there are investment opportunities to consider if you keep an eye on affordability.
And Nick Gurley's caution about a potential downturn adds weight to the conversation, while the media expert emphasizes the pressure on home affordability from corporate investors.
Together, these insights show us that while challenges abound, there are crucial strategies for navigating the market this year.
So if you found these insights helpful, don't forget to like and subscribe for more valuable content.
Thanks for tuning in to Financial Insights in Minutes. Stay updated and check out our other videos for more in-depth market analysis.